All right. Good afternoon, Brian. It's great to have you on our YouTube channel. So how you doing?
I'm doing great, Tom. How are you? Happy New Year.
Thank you. I wanted to introduce you to the audience. I know I had interviewed you once in the past, and it is February 3rd, 2023. So it's a new world with a lot of new things happening in the lending market. For those of you who don't know Brian, Brian's one of the top loan officers in Brevard County, and myself and my team have worked with him a lot through many years. So, Brian, what is going on in the market right now? I know there's a lot of talk about the higher interest rates and affordability. So, what's the latest?
Well, so affordability is, I believe, ultimately what is, and before I start, I heard a great quote I'd like to share with you, and it's not a bad market right now, Tom.
Yeah.
Tom, it's not a good market right now.
Right.
Tom, it's the market right now. So affordability has really started to pinch us a little bit, and in Florida in particular, it's a two-pronged fork in my opinion. Number one, obviously the interest rates have gone up. So last year was probably our biggest one-year rise in the history of mortgages. And a year and a half ago, we were writing loans in the high 2s and 3% range. And last year, that crept all the way into the 7s for a while in November, December.
Yeah. Can you say that again? Because that's a pretty profound statement. The largest rise in 1 year in the history of mortgages.
Yeah. Last year, the beginning of the year started in the 3s, and the end of the year was real close to 7s.
Wow.
So, and let me backtrack on that. Definitely in the last 20 years that I've been in the business. So maybe not in history, but I would have to go back and check on that. But it was pretty significant.
Yeah.
So, your average $400,000 purchase price, I mean, we're talking payments that are going up $500-600 a month from where they would have been a year or so ago. So that, and if you've turned the news on recently, we have a little bit of a insurance problem in Florida.
Yeah.
Okay.
Yeah.
So all of these storms that have been rolling through here and all the litigation and everything we've had going on. I own a couple of property I live in, a property that also some rental properties. I just had one renew that was $2,500 a year ago and just renewed $5,700.
Wow.
So if you take your average buyer that's maybe already in a house and they're paying $2,000 a year and they get a renewal for $3,500, and or a new buyer that was going to buy a $300,000 or $400,000 house, you've got a situation now where the affordability is really, really impacting our business. And the other thing it's impacting is, so if you did buy a house a couple of years ago and you approach somebody and they say, hey, I was thinking about buying my house, I'd like to list it, maybe buy a new house. Well, when they do the math on the fact that they are right now on a 3 or 3.5% interest rate, and they're going to go to 6 or 6.5, that might be the difference between listing or staying where they're at. And I'm sure you're seeing that a lot.
Yeah. Yeah. Some people are obsessed with interest rate only, not about the reason why they actually want to move in the first place. And they're just, I'm not going from a 2.5% interest rate to 6.5. I just won't do that. And they're completely ignoring the fact that you need to move for other reasons than the interest rate, but still it's a big deal. Yeah.
Absolutely. So on the insurance front, I've got some friends in the business, obviously, and over the last couple of years, especially because we had all the storms in 2004. So nobody wants to write a roof now over 15 years old. So all of those roofs kind of started coming to fruition over the last couple of years. So now what we're seeing though is we're seeing a lot of the insurance companies non-renewing, and that's been a big thing. We've got, I think it was maybe 6 companies last year that wrote in Florida, either went insolvent or decided no longer to write in Florida. So you have a lot of non-renewals. So when you send me a client, what I try to do when I do a pre-approval is to say, hey, what would the average taxes be on this house? When I do the pre-approval, what would the average insurance be? And I've got a lot of people calling me saying, hey, I have a really good idea on insurance. The current owners are paying $2,000. Well, what they don't realize is 30 days from now, they're either getting non-renewed or their 2 grand is turning into 3 grand.
Yeah.
So then you have everybody migrating to Citizens. Citizens now is stepping up to the plate and saying, hey, we were really supposed to be the insurer of last resort. We don't want to have all these policies. So the Citizens policies that are renewing are coming at a much higher premium than they were last year. And now Citizens will no longer write a policy if there is not a roof permit. So, you have some of these people that have put roofs on after a storm, didn't get it permitted. Now Citizens won't even touch it. And that is new as of January 1st.
Okay. Interesting. So even if it is the insurance of last resort, if somebody's doesn't have a roof permit, they're not going to even get Citizens in that case.
Correct. And a lot of other insurance companies have always taken that stance, but that's when your insurance agent would come back to you with your client and say, hey, I can't put this one with Frontline or Tower Hill or whoever, but we can go to Citizens. Now you can't go to Citizens anymore.
Right.
And again, Citizens is raising their rates. They're, the days of Citizens being 2 grand and everybody else being 5,000, those days are coming to an end quickly. As we call and get our clients insurance quotes, we're finding that's the case now.
Yeah. And I think that it makes sense because the time when people did so many roofs without permits was typically after the storms of 04.
And that's starting to fall
running
off.
around. Yeah. And that's kind of, if they can't show a permit today, either the work was done unpermitted since then, which would be kind of unusual, or it was from that time, which means it's already past that 14-year mark. So it's understandable.
Correct. Now, the silver lining here is in the last 6 weeks, rates have come down pretty significantly for a 6-week period. So the stuff we're seeing now is more in the mid 6% range to even a little bit lower 6% range, depending on credit score and stuff. And just before Christmas, the national average crept over 7% on a 30-year fixed rate mortgage.
Can you explain to somebody who doesn't quite understand? They just announced, I believe it was yesterday, a 0.25% rate increase. How could rates be increasing as of the news and yet they're going down in reality? How does that work?
Super good question. And I get it all the time. So if I have pre-approved buyers out there shopping, they're calling me panicking in front of that Fed meeting because they've read on the news rates are going up a quarter. That Fed meeting actually helped us Wednesday. Okay. So when the Federal Reserve, when I say Fed, meets and decides what they're going to do with interest rates, you're talking about your overnight lending rate, which is going to affect your credit cards, your home equity lines of credit, some car loans, and things like that. The Federal Reserve does not directly control our long-term interest rates. Those are a product of bond prices going up or down. So the meeting Wednesday, it was already baked into the pie. Everyone knew that they were going to raise rates a quarter. Right. What happens then is they listen to the verbiage. Okay. Is the Fed hawkish? Hey, we're going to have to raise rates a lot more times to get this inflation under control. Or is the Fed dovish? Hey, inflation's starting to come down. We might be able to end these rate hikes in the near future. And the language Wednesday was dovish, which helped the bond market, which brought rates down.
Okay, got it. So yeah, and I had heard from people talking that it was essentially a relatively positive message and the markets responded to it in a positive way.
Well, and the crazy thing is today it's kind of an inverse of that based on the jobless reports and the jobs numbers, because they created a lot more jobs than anybody thought about, which that's a great thing, right? Except now the Fed might say, hey, we're trying to cool this economy down and now these jobs numbers are still so high, maybe we will have to hike again. So that's the paradigm that's always at play there.
Very confusing to an amateur to think of unemployment needs to be high for it to be a good thing in the context. It's not what we normally think of.
And inflation is the #1 enemy of bonds because it erodes their value. So that's what now listen, we may never get back to the COVID interest rates. That was a blip on the radar of ridiculously low rates, but inflation has been what's driving up rates currently, because the higher the inflation, the more it erodes the value of the bonds, and the bond market ultimately is what drives our 30-year and 15-year long-term mortgage rates.
Yeah. And I think that, everyone, even no matter who you are, what type of business you have, agrees that heavy inflation is not a good thing. It was exciting to see as a listing agent that I could get 10 offers on any property, essentially, that I threw out there back in May of 2022. It was exciting to know that the market was just so hot, low inventory, low interest rates. I've had properties where I had 54 written offers and ended up 85 above asking, hundreds of thousands above asking price. So it was interesting at the same time, as as you're in the middle of it, that this is not sustainable. And then when you see that cost of living is going up, especially for the lower income level people, is that they're not going to be able to afford, normal cost of living. So inflation is a really dangerous thing.
It really is. Like I said, the cut in buying power based on that double-edged sword of higher insurance and higher interest rates has been pretty remarkable to see, especially in the lower income price points. I have people call me and say, hey, I need to buy something in the 150 range. Well, the 150 range is now a small condo or a small townhouse, but that HOA also erodes buying power. So if that property has a couple $100 or $300 a month homeowners association fee, right now the ballpark is, for every $10,000 you finance, that payment's going to come to about $65. So if you got a little condo or townhouse and the HOA is $200 a month, it's basically going to erode about $30,000 of your buying power.
Wow.
Wow. People don't realize that. And I tell them, hey, your max is maybe 180. And they call me very excited and say, hey, we found a condo, and it's only 160. And then when I factor in that homeowners association, they're not going to qualify for that.
Yeah. So any thoughts about how Hurricane Nicole will impact, prices of insurance? I'm sure, that's going to cost billions and billions of dollars. What just happened just recently, even though it wasn't on our side of the state, it was a massive destruction from Nicole.
That storm is going to end up probably the second most expensive storm in history, is what I'm hearing. And the repercussions are going to be felt for a while, for sure.
Yeah.
And you've got this whole thing with flood versus wind, which one caused the damage.
Yeah.
And now your flood insurance has gone up a lot on that front. But I think the main problem, I heard a statistic that I think 82% of all homeowners insurance litigation takes place in the state of Florida, nationwide.
I've heard
82%.
that as well. Yep.
So you have all the door knockers knock on the door. Hey, Tom, I can get you a new roof for nothing. That's what spurred this. But certainly as these storms get stronger, and I don't want to go into climate change or any of that stuff, but if I was an insurance company, I'm not sure I'd want to be in Florida writing insurance, to be honest with you.
Yeah. Yeah. So with Nicole, I had heard about that a lot of the people had where if you looked at what actually happened, it was rising water, ocean water coming into the house from a surge, but they didn't have flood insurance. And so they're taking the claim on their normal home insurance. So yes, it was a hurricane, but and I guess the question would always be, well, what caused the damage first? Was it the hurricane, damaging the rest of the structure, or was it the rising water? And the insurance companies, how would they ever know? But if they didn't have flood, it's all on the hazard insurance company to worry about. That's why I had heard that they're going to look into insisting on people having flood insurance, because that way, at least if that ever happened, that, hey, this was actually rising water. It wasn't just storm winds that caused the damage.
Yeah, so there was a rumor going around the industry, and you and I talked about it a little bit about a week ago before we decided to meet on this call, that Citizens was going to make it so in order for them to write any policy, whether you were in, regardless of what flood zone you were in, they were going to require flood on all of their policies. And I think we just found out, I think it was Wednesday or Thursday, they finally came out and announced that that would not be the case. But condos right now, if you have a condo with a master insurance policy, which most of them do,
Yeah.
they're going to be required to carry flood insurance even if they're above the first floor out of the flood zone. So that's going to be an added expense for condo owners. And I
Yeah.
mean, don't even get me started on condos because, after that Surfside building collapsed, I mean, I said right then, I said, what a tragedy. But what they're doing now is they're going back on these older condos and they really want to see the minutes. They want to see if there's any structural issues. So condo lending has gotten even more complex than it was just a year ago. And
Yeah.
that whole thing with, is a condo warrantable? Is it not warrantable? We don't know. So they're really digging back into the minutes now, and Fannie Mae and Freddie Mac, there's a lot more I's to dot and T's to cross with condo lending. Not to mention now, if the condo's in a flood zone, even if you're on the fifth floor, got to have flood insurance.
Yeah, that's amazing to be on the fifth floor and need flood insurance. I also heard yesterday, I was talking with an insurance guy, and he mentioned that one of the decisions that was just made recently by the state of Florida was that they're not going to allow assignment of benefits anymore. So the contractors or roofing contractors who would go door knocking and have the homeowner assign all the benefits to the roofer, and then they would just do all sorts of upgrades, things that weren't even on the house to begin with. The assignment of benefits is not going to be allowed anymore. However, that's not going to lead to a reduction in premiums right away. So some of these decisions, it's going to take time before there's any savings from the insurance company side to be able to build up their reserves again. But it is a step in the right direction.
From everybody I've talked to, that special meeting in Tallahassee, the new rules that were put in place, you nailed it. Everybody I've talked to said, is it enough? Is it not enough? We're not sure, but everybody was to the same point. Yes, this is going to help, but things are going to get a little worse before they get better. So they're thinking over the next year or two, we will start to see some prices come down. But in the immediate future, everything I'm seeing is still going on an upward trajectory.
Yeah. Yeah.
I mean, there were neighborhoods just during, I believe it was Ian. My son is over in Orlando. We went over to see him. I mean, not 3 or 4 miles from UCF campus. He took us into some neighborhoods, and that was a nothing storm basically when it came over. There were entire neighborhoods over there where we drove by, and every single house had all of their carpet, their base cabinets, everything out by the curb. There was watermarks 2.5 feet up their front doors.
Yeah.
And this was just in Orlando, and that was from Ian. So, we don't even, that didn't even register with us, but these insurance companies are getting hammered by all these claims from these storms.
Yeah. Well, I just got done paying the tax bill on all the houses that I owned, and between the increase in taxes, since you only can have one homestead, right, and the rest of them are just they're going up per the value, and then the increase in insurance, it's pretty outrageous. I think a lot of landlords, they're going to have to raise their rents, because if you just had a big increase in insurance and a big increase in property taxes, if you had a profit margin that you were making for your rent every month, that could have literally just wiped out, but you could be in the red and need to raise the rent. Well, again, it's back to inflation. Now your poor tenant is going to need to pay a higher rent because the landlord's now losing money all of a sudden.
Well, and I have a couple rental properties also, and I have tenants that I love that have been there for years, and I haven't raised the rates. And I finally called them and I said, "Hey guys, I said my insurance is more than doubled on this house, and as they're going and buying $5 a dozen eggs, their landlord's calling them saying, hey, I got to raise your rent." So 100%. And people call me and they say, "Hey, is it a good time to buy a house?" And and I try to be as honest as I can with them. And I had a family member recently call me, and she said, "Should I buy a house right now? What do you think values are going to do, interest rates and everything else?" And I said, look, values have dropped around here. We can see that. I said, so let's pretend that values are going to go down 10% over the next year to year and a half. She was buying a $400,000 house.
Yeah.
I said, if you wake up a year from now and your $400,000 house is worth 360, is that going to affect your life? She said, well, I'm paying $3,000 a month for rent.
3,000. Wow.
Yeah. I said, okay, so you know you're going to burn $36,000 in the next 12 months. She goes, correct. I said, okay, so that's about a break even, right? And that's assuming values go down 10% in her case. She goes, what about interest rates? I said, and at the time rates were about 6.5. I said, if I call you 2 years from now and I say rates are at 5, are you going to be happy? She said, absolutely, because we'll refinance. I said, if I call you a year and a half from now and I say we were wrong, rates went to 8%, are you going to be happy? She goes, well, yeah, I guess, because I locked in 6.5. So if you're buying a house to flip it or short term, I probably don't think it's time to buy. If you're buying a house to live in it, to house your family, I mean, what's your alternative?
Right.
Look at the price of rents.
Yeah.
And I do believe in every economist that I'm following, and we're starting to see it already. I think all the people that are buying houses right now and last year, for the most part, probably going to have a pretty big refinance opportunity within the next, gosh, it might be sooner, but I would say 12 to 18 months. But think about it. If you bought a house in December and the rate started with a 7, and I call you now and I say rates are at 6.3 or 6.4, I mean, on a $400,000 loan, we're getting close. Now, I would never advise anybody to refinance yet, because I do think rates are going to come down farther as we get inflation under control more.
Yeah.
But I think everybody that's buying a house these last year to 18 months and maybe for the first part of the spring, I think they're all going to have a good refinance opportunity coming up. So the interest rate isn't forever, hopefully.
Yeah. Yeah. I did the math with this on somebody, not at a $3,000 rent, but I think he was describing his daughter was paying $1,600 in rent. Mm-hmm. And so I just did the math. 1,600 times 12 is $19,200. So that's what she's paying. And I said, well, you know, if she stays there for 3 years, that's $57,000. So that would be the question of, okay, so that's $57,000 that's just gone. You know, it's not going to come back.
100%.
There another year, you're up to $90,000 real fast.
And you get no tax advantages.
No tax advantage. It's not an investment, because essentially you're still building equity no matter what. I mean, the owner is still building equity if they purchased a home. They can always refinance if rates come down. They can make it their own. So there's just so many advantages regardless. And this is a lot of wasted money where, you know, when you look at, if the market did come down, this person who's been in that house for 4 years, the market's not going down that much. It may go down, but it's not going to go down that much.
So, and one of the things I just read that really stuck with me was, it's a gentleman I follow. He does a video like once a week. He said, look, if we have a reset in real estate prices, go back to pre-COVID prices. If that happens, we're talking about a 24-month reset, not a 10-year reset. It's going to be a short reset. So, and I still think we're pretty well insulated here because of all of our industry and stuff, but we are seeing some places in California and other places where the values are dropping. Luckily here, we've been, relatively insulated from it. I'm not saying values haven't come down, because they have some, right. But again, like if you bought a house 5 years ago and the value comes down 10%, look at where you're going to be. So it's like getting in and out of the stock market. Are you a trader or are you an investor? Are you a homeowner for a long term, or are you flipping houses? There's a difference.
And I heard a good illustration about that, because people ask us, they watch the news, and what they're watching is nationwide news. It's the entire United States.
Yes.
And then they ask us, so how's the market? And they're tuning into nationwide averages. And I heard someone liken it to saying, like, what's the weather like in the United States right now?
Right.
Like, what's the temperature in the United States? Like, there's a lot of different, it's different in different places. Well, it's the same with real estate. and we live in Brevard County, Florida, so our temperature is quite different than in a lot of other places. So you might be hearing averages that could be worse than what we're experiencing. And so it's just important to, hear the nationwide news, but then look at what's happening locally. We could be insulated. And I think in a lot of cases, we are pretty insulated from some of the downturns in other states.
I mean, we still have a low inventory.
Yeah.
We just do. And you have to be careful who you get your news from.
Yeah.
And I mean, if you turn on MSNBC, I think it's MSNBC, there's a Diana Olick is always on there talking about real estate.
Yeah.
She's been saying it's a terrible time to buy a house for 10 straight years. So if you would have listened to her, all you would have missed out on is, your home value going up 90%, and you'd be renting from Tom or Brian, who are calling you going, hey, the insurance went up, I got to raise your rent again. So
Great.
Be careful who you get your news from.
Yeah. And why is she saying that? I mean, if she's got a show and people are still, it's like, like a weather reporter doesn't have to be right. They still have a job. They just say what they say.
Right. Hey, they're right 50% of the time.
Exactly. Well, thank you so much, Brian. I really appreciate you taking the time to chat with me today. I'm sure we'll be in touch, and hopefully you viewers enjoyed it. Be sure to like and subscribe, and we'll talk to you next time.
Anytime. Thanks for having me, Tom.
Thanks, Brian.
Bye.